Oh, nice.
Hello. Can you hear me?
Yeah.
All right.
Hey, Vinay.
Hey, so ready for one more session?
Mm-hmm.
Yeah,
Yes.
just a minute. Make some music. It doesn't seem to be stopping. Okay, hold it. Hold up. It was playing. Okay. All right. Wait, let me set up a few things. So, how was what you learned so far? You guys were able to look at the charts now and understand?
To some
Yeah.
extent, yes. Yeah.
Okay.
Sachin, what's your learning?
No, I think when I look at it, I kind of able to follow. Yeah. So it's at least a lot more as a chart comes live, kind of thing, can figure out what's going on where and all. So, but again, a bit not able to leverage it, but definitely able to
Nothing.
look at
That, you haven't gotten to that point yet.
it.
You can actually leverage it. Okay. Alright.
It's all about leverage.
Yeah, I know. We'll get there. We'll get there slowly. Yeah, because in order to get there, you need to learn a few more things so that it makes it a little more easier.
Uh,
Otherwise, mhm. We're almost there. We are getting to
uh,
the point where where you will start. You can start actually leveraging it. Okay, you can see my screen.
No.
Oh, sorry, I don't share it. Yeah.
Mm-hmm.
now.
Okay. Perfect. Okay, so wanted to introduce one more model, one more thing that we will end up using when we're looking at the charts and things like that. It's called the market maker buy model or sell model. Okay. We also abbreviate this as MMXM. Okay. So this you will start hearing a lot. Um, because whenever you look at any charts or anything, then you will start seeing that people will start talking, oh, it's a buy model, it's a sell model, what is happening, today was the clean buy, and etc etc etc. But what does this really mean? So that is what we look when we look at charts. I'll try to explain that. Okay, but it's important for you to understand this is called the MMXM or the market maker buy model or the market maker sell model. Okay, so the idea is very simple. Whenever we were looking at the charts, right? Let me go back to this chart. So whenever we wanted to take an entry to go long, we were deciding based on the left side, right, of this. So if you look at it, this is essentially a curve. It goes from top to the bottom and then from bottom to the top, right? So basically, so this is called the left side of the curve, okay, or in this case, the sell side of the curve, and this is called the buy side of the curve. Okay,
Hmm.
so this is a clear pattern that you will use for taking your entries and doing everything for framing your trades, everything. This is essentially the key thing that you will end up doing. Okay, and if you look at any price pattern at in any time frame, this will happen. Even if you go to the 15-second time frame, you will see this happen. Okay. So this is the core tenet of how price moves. Okay, to essentially capture liquidity wherever it is available, to take it and then goes in the opposite direction until it reaches a point from where it will actually start moving higher. Okay, so um, so basically we call that the MMXM. So depending on whether you're trying to do a buy or you're trying to do a sell, you just call it that specific model. Okay, so this side is essentially the buy side. This is the sell side. Okay. Then the other thing that I wanted to talk to you about was time frame alignment. Okay, it is related to the next topic that we have to go to, which is essentially about how do you analyze the charts in order to make an entry? Okay, so rather like how we were saying, right? How do we actually leverage all this information? Okay, in order to do that, you need to understand this phenomenon. Okay, so we talked about PDRAs, right? So basically, the so-called algorithm of all the market makers, right? It runs on different time frames. Okay, so and they target certain levels, right? So basically, so then you need to go and say, okay, if I'm going to be doing position trading, so where I just take a position and then let it go for years together,
Mm.
right? Then what do I do? How do I choose when to invest, right? Or what is the current trend in the market that you want to leverage off, right? So then you start looking and saying, okay, I need to start looking at monthly PD arrays, okay, and at which I will actually take my entries. Okay, so this could be order block, this could be a FEG, this could be volume imbalances, it could be anything, right? So you will actually use these PD arrays to be able to say, okay, now I can take a trade based off this. Okay, I'll get to examples, then you'll understand it. Just remember that this is exactly how you need to. So look at this as the PD arrays based on which you are actually going to take the trade off, and you're going to use these time frames to actually make the entry. So this is your entry time frame. This is your analysis time frame. Okay.
Mm.
Let me make that a little more clearer in this picture. Where do I write it? Better document.
So how is that kind of correlated? Like day, monthly PDA, daily MXM?
Make sense?
Yeah.
I'll show you. When I show it on charts, then it'll make it a little more easy. Okay. What color will work? Red. Red is nice, or one blue? Red is better, right?
Yeah.
Okay. This is the entry time frame. And this the analysis time frame. Okay. So just remember this, and this will become a very important table for you guys as you go forward. Okay, then I'll come to something else later. Okay, so let me shift the attention to the charts. This is where you will actually understand what exactly is happening. Okay.
So S&P ES shows big FVG for fair value gap today. Saw that.
Yeah, just hold on. I'll use today's example only. So
Uh,
all right. Let me get rid of this first. Yeah, come to that later. Okay. Okay. All right. So if you look at that table, we were looking at a start. We'll start with the daily time frame, right? Let's start with the daily. We don't need anything more than that for what happened today or what has been happening last few days. So basically, this was the daily fair value gap.
mm,
Okay. So the idea here is that you take the daily targets, okay, and based of which you will actually figure out, okay, what is going to be my bias to go forward or go backwards, okay, and that will decide whether you're going to move forward or you're going to move backwards. So in this case, what happened here was simple, right? We had this volume imbalance here. Okay, based of which it was trying to figure out what it wants to do in life, right? Do I go forward or do I go backwards? So what happened here? First day it went, okay, it came, it decided to go up. We knew that since it was moving up, the next target was the daily fair value gap, right? It went there. Then it was like, okay, now I've almost reached the top because my next target is here. But then we have a lot of order blocks here, right? We have this huge order block sitting here and this, and there are a lot of orders here. Now these guys have, some of these guys, especially here, they have probably sold, okay, and they don't want price to go up. So they need some time to short out their, take out their positions and make sure that they are fine, right? So they will not allow you to go higher that easily, especially to all-time highs, okay? So they're going to play around here for a while, because especially because the price moved a lot from this point till here, right? So what typically happens is it tends to go to a higher time frame PDRA, in this case a daily PDRA, and then does a turn to take liquidity in the opposite direction. Okay, so basically this was the the buy side of the curve, and then this became the sell side of the curve. Okay, and then they did a buy side again to generate some more liquidity. Okay, because they're running out of orders here, so they want to create some more orders and things. And then again they brought it back. Okay, and if you look at it, it's all based off this daily fair value gap. Okay, now let's go further. Where did this turn happen? Go to the left. Happened here, right? Almost to the tick, right? Out of this, what is this?
First thing, the chart you're showing is 1 day and calendar time frame yadu 1 month.
Nothing. No,
Just
it's a daily time frame.
day time.
Okay. So what is this
order
black
block?
candle there?
The black candle
This one.
is that order block.
Yeah, it's just an order block. Meaning,
Sorry,
for now, don't worry about whether it's a mitigation block or an order block
sorry,
or a
it
breaker
was an
block.
order block manipulation, right? No.
Yeah, this was an order block, right? So they started from this point. This order block was a result of the fact that these are the order blocks that it tried to take orders from. It came here, took these orders, and then decided to shoot up. So it came all the way till here, and then it decided to go up. And now this is a daily PDRA. So the essence is that the higher time frame PDRAs is where the change in direction typically happens. Okay, that's very important to understand. Did you get that?
Yeah.
Sachin?
Yeah. So PD array. When you say PD array, which one you mean?
The fair value gap and the order blocks that we discussed till last session, right?
Right.
Okay. So the higher time frame PD arrays are where typically price changes direction. Okay. So in this case, this is almost at the bottom of the curve. Typically, you'll always see this happen. It'll go all the way up, come all the way down, almost till the bottom, and then go up. This is the typical pattern, no matter what you see. Sometimes it comes here also. See, it came all the way to this mitigation block.
And it happens within time frames also, right? Not just one day.
Yeah, we'll get to when it will happen. That is the next step. Okay. Some of it you can predict, some of it you can't, but in general, there are tendencies, but it becomes more complicated. But for now, don't worry about when it will happen yet. Okay. We'll get to that. Intraday is a little more easier to predict than longer term, to be honest. Okay. But the idea is that all these turns will always typically happen at significant PD arrays on the left side of the curve. Okay. So here also buy side, sell side, buy side, sell side, buy side, minus sell side, buy side, sell side, then sell side, buy side, sell side. Okay. So basically, this curve will always be the pattern that you will see whenever you do the trading. That is why they say that never buy at the top because it will turn directly. Okay. Nvidia went up to what, 130, 140 something. It came down because you cannot sustain it. Right? You cannot sustain a run which just keeps going higher and higher and higher. There just aren't enough shares in the market to be able to sustain that kind of run. If somebody, you can't have everybody in the market just buying, right? At some point of time, somebody has to sell. Only then there'll be more shares available, which can then be used to buy more, right? So since it's always typically a finite quantity, you always will have a situation where you will have people buying and then people taking profit and it'll coming down and then again people buying for the next wave, and this is typically what always happens in entirety. So if you even go right to the very beginning, you'll always see the same thing: high, low, go up, down, up, down, up, down, up, down, up, down, up, down. Okay, so this is the pattern that you'll always see. Okay, and in each and one of these patterns, you will see that it tends to always hit a major PD array and then only turn. It doesn't turn at a random candle. Okay, it's always at a specific place where it will go in and take a turn. So the higher time frame PD arrays are where you will essentially look and analyze and then say, okay, these are my higher time frame PD arrays. Okay. Now for the daily, typically what you need to do is you need to move to the 1 hour time frame to be able to say, okay, but you cannot take a trade off this because you're waiting for days. You don't know when it's going to stop. Okay. And if you keep waiting, then you're like, oh, it's already gone up. Now you're not sure. Then you say, okay, fine, I'll buy somewhere. Big deal. Okay. So normally, because otherwise you don't know if it's going to be like it's going up and then coming back down. Okay. How can you be sure about whether you can actually buy or not buy, right? So of the daily time frame, then you move to 1 hour. Okay, I'll focus on this area for now. Now we came to the 1 hour. Here also the same pattern: high, low, high, low, high, low, high, low, right? So normally what happens is this. Here you can now see a breaker form. Here. Okay, I'll mark it. This is the breaker. Can you see it? I'll put one arrow so that it's easy. Put an arrow thingy somewhere.
No.
Where is the here? Arrow. You see? These 3 candles, right? Is the breaker block. I told you the pattern, right? It goes high, low. That means it's reached the bottom. And then it goes up. And then it forms the breaker block. Okay. So basically, then you can frame the trade of this breaker block. Okay. So what you actually do is you wait to see if it goes higher. I don't know if you can see it. Maybe okay, let me see if I can. Let me put this. Okay, can you see it better?
Mhm.
Okay. So when does this become a breaker block? When this candle goes higher than this. Okay, because it has to go higher. Otherwise, it's just either a mitigation block or just an order block. The minute it goes higher than this, then this becomes a breaker block. Okay. So the minute it becomes a breaker block, then you can look to figuring out, okay, now that has become a breaker block, now I'll have to figure out where I can take my trade. Okay. But this is on a 1 hour time frame. Okay. So that means that you need to make sure that your stop loss is at the correct level. Okay. It will also be a little larger than normal. Okay. But this is what you will do for swing trading usually. Daily order block and 1 hour PDRS is what you can use to do your swing trading. Okay, so now you know this. So basically, you will basically say that, okay, I will buy somewhere within this breaker block. You will decide where to buy. There are specific entry points that you can use, but very generic ways, basically saying at the top of the breaker block, you buy, okay, and you put a stop loss base essentially at the low here, okay. So, and this price will never come here, okay, because if it comes here, then your theory is invalidated. Okay, because then this is not really a breaker block. Okay, this is just a false move and it's going to go down lower. Okay, but if this is a proper breaker block, then you can take a trade anywhere in this and then you need to hold it until it keeps going higher and higher and higher. And then finally you got your perfect trade, it went all the way up. So the next daily PDRA, it is targeting. Okay, so did you understand this?
Yeah, it's concepts come in and out for me. So the mitigation block is kind of when it inverts, right? So it's going up,
No,
it's going
no,
down.
not only mitigation block. It can mitigation block can be traded through.
Yeah.
Okay, so typically there's never a turning point. It'll give you typically what happens at a mitigation block is that you will get a retracement. Okay, usually. Okay, because there is a chance of it failing and price will continue again in the same direction. Okay, so that's the main difference between usually mitigation block and a breaker block. Breaker block will not allow price to break it and go forward. Okay, it is breaking the price. Kind of try to remember that.
Okay.
Mitigation is you're just mitigating some orders. Okay, but in general they're all order blocks. So just remember that they're order blocks. So these are the significant places where you can actually do this.
Yeah, so there the candle wick going topper than the previous wick, right? So
Yeah.
why is that, right? What's happening behind the scenes there?
Nothing, because it hit a higher time frame PDRA, okay, which was a strong PDRA. This is where the market makers decided that, okay, we've had enough, we want to take it higher now. Okay, because they did what they had to do. They had to pull the market down. They did that. Okay, now they're saying, okay, fine, that's good enough. Now we're going to go higher.
So if the new wick is higher than the previous wick, then it means that it's going up.
Yes, but not every week. Not every week. There's some specific weeks you look for. Okay, because what typically happens is it only happens at breaker blocks. Okay, but to qualify a breaker block, this has to happen. It can be a wick. It can see. It can even happen like this. It can completely close above and then come back and then go.
Yeah.
Okay, so any of these places are good places for you to take a trade entry. Okay. So typically breaker blocks are very strong ones. So usually you would. So in this case, if I was just doing some basic intraday trading, right? I can always target this imbalance here, this volume imbalance here.
Hmm.
Okay, that was the first target it went to, the volume imbalance, because it's again a daily imbalance. Okay, so that definitely some orders which could not get executed. That's why it's empty, right? So it's a very strong target. First thing it did is it went there. Then it decided to come back and test this again. And then it came to this one. This was the order block, right? And then at this order, the minute it came to this order block, the guys who had bought here, they're saying, "Oh, huh, you cannot come further. I'm going to send you off from here. This is it. You had enough until now. Now I'm going to send you off." And then it went up.
Hmm.
Okay, so typically you will find this pattern. These are the typical entry patterns that you will look for. Either you will look for this breaker block entry, okay, or you will look for this last order block entry. Okay, these are, and then there are some fair value gap entries also that you can actually take, which I will talk about later.
Hmm.
Okay, when we talk about entries, then I'll tell you the entries which make sense to take. Okay, but this is the way you analyze the charts. Okay, you know that is going to go to this level, but how do you combine that to actually figure out where to take your entries? This is how you go about doing it. The
Hmm.
minute you start, you look at your daily PD arrays, and then you look, okay, fine, let's hit my daily PD array. Okay, my next goal. What do I do next? Okay, am I going to trade intraday or am I going to trade longer? Okay, if you are looking at your daily PD arrays and your time horizon is very long, then you do it off a 1 hour chart. Okay, you use your 1 hour chart to be able to figure out where to take the trade. Okay, because then you're using your 1 hour PD arrays to frame where is my entry that I can take. Okay. Now the same thing. Let's look at the same area. Okay. So now I have this breaker block here. Okay. Now I'll from 1 hour chart. Now I need, and now I want to take a trade towards this. Let's assume I want to take a trade to this. Okay. Now how would I do it? Okay, I'm on a 1 hour chart. So if I'm on a 1 hour chart, that means that I need to use a 5 minute chart to be able to actually take my entry. Because okay, because I'm using a 1 hour PD array. Okay,
Hmm.
so since I want to trade just a minor move, I'm going to go to a 5 minute. I need to figure out what the hell is it. Here, yeah. So this is the 5 minute chart. Okay. Now in the 5 minute chart, now I need to go and take a look and then figure out, okay, what are the other PD arrays that I can use here? I moved from daily to 1 hour PD array, right? And in the 1 hour PD array, I have to take because 1 hour was my entry. I used a 1 hour breakup log to basically say, okay, this is where I can take my entry.
Hmm.
Now I'm on the 1 hour chart. I have to use a 5 minute. I need to find a 1 hour PD array to base my initial I think PD array on, and a 5 minute entry pattern and my 5 minute entry chart to take an actual entry. Okay, so this is typically the correlation that you use. Okay, so in this case,
Sorry, can you come again on that? Like I did not understand from 1 hour.
so
5 minutes.
basically it's leather. It's a question of what kind of trading you're doing. Okay, long term or short term.
Short term.
Okay, so if you're doing short term and intraday trading, then you have to use lower time frames to take your trade, because if you take a daily, it's a complete day. There's no way that you can take a trade
Hmm.
which you can do intraday, right? But you know that the daily time frame PD arrays are stronger. Okay, so you look for those to basically say that, oh, okay, it's quite possible that price can reverse from here. That is the reason you look at daily or weekly or monthly time frames. Okay. But to actually take a trade on intraday, you are looking at 1 hour charts. Okay, to be able to find a PD array from where you can actually take a trade. Now you will look for the same PD arrays, but on a 1 hour chart. Okay, for example, I wanted to take a trade here, right? So this was 6th August.
Mm.
Okay, 6th August. Okay, so that means I'm here on 6th August. Now I want to take a trade. Okay, now I need to figure out, okay, what do I do now? Okay, I need an entry. Where will I get an entry? Okay, now I know that I'll look to the left here. Okay, this is 9:30. That is 9:30. This is 9:30. Okay, now I know that price has moved in this direction. Now I'm going to look left and then say, okay, what do I see here? You see a fair value gap. Okay, and I see another fair value gap here. Okay, and then I know that this one, I'll change it to a different color. Orange. Everything is the same color. With darker blue. Okay. I know that this was my daily PDRA. Okay. So price has come all the way here and it has gone up. So the likelihood of price going all the way back down is very low. Okay. So then you're going to frame it. Right? You say, okay, price went up here, came here, now it has gone up. I see this volume imbalance which is there on the daily. Now I want to target this. If I targeted it on this day, which was the Monday, the 5th of August, I could have targeted it, but it didn't go all the way. Okay, because maybe it was still struggling because it's at the very bottom end of the cycle. So it came back down. Now I am going to say, okay, fine. Today I will try and take a trade towards that. Okay. So what you're actually doing is you're saying your bias is basically this volume imbalance. That is what I'm trying to trade towards. Okay. And I need to make some money while I'm doing that. Okay. It may go all the way. Sometimes it may not go all the way. Okay. See, even on this day, if you try trading, and this was the 5th of August, this is when it actually went to the very bottom. Okay. You would have still made money because it went almost all the way but stopped.
Yeah.
Okay. You would have still made enough money. Okay. But you need to figure out when to take the trade and do that. So, but now on the second day, now I'm saying, okay, I know for sure it's going to go there because it just went almost all the way but couldn't go all the way. So it came back down to get some more liquidity. Now it's going to go there. Okay, so on a Tuesday, I'm going to target that. So then I will look towards the left, okay, and then start seeing, okay, I'm in my breaker block, 1 hour breaker block, and I need to find similar entries that I can use, okay, to take a trade. So what do I have? I have two fair value gaps here. Okay, I have a low, I have a high here. So this is my breaker block. Again, yet another breaker block. Okay, so I have confluence here. Okay, you got this? Okay, so basically there's this breaker block. Now there's this fair value gap and this fair value gap. So I know that if price comes into any one of these fair value gaps, I can take a trade targeting this. Okay, so that's the idea. So now I'm using my 5-minute time frame. So ideally I should have taken a trade here. Thankfully it's after market has opened. Okay, so you could have taken a trade here and then you could have targeted that and then set your target somewhere around there and then waited. So basically sometime in the afternoon it went and hit that. The minute it hit daily volume imbalance, which is a daily PD array, price came in the opposite direction. Okay, almost to the point where you took your entry. Almost to the point where you took your entry.
Hmm.
Okay. So this is how you normally have to use your analysis time frame and your entry time frames. Entry time frames are where you actually take your entry, where you try to find the PD arrays on which you will enter. Your analysis time frames are used to identify turning points. Okay,
Hmm.
where price will actually turn from.
Hmm.
Okay, so typically if your entry points are 5 minutes, okay, you look for 1 hour PD arrays, or you will look for 4 hour PD arrays, or you look for daily PD arrays, or monthly or weekly PD arrays. Okay, if any of them exist in the vicinity, then you can expect the price might reverse from that. Okay, now let's look at another example.
Can you take something for today and
Yeah, that's what I'll do.
Yeah.
I'll go to today's price action.
because here when we are trying to switch between graph, it's like a nightmare of
Yeah. Exactly. About to say that.
Okay, no problem. So this, where is this?
let's go to
I'll get
day
rid of this for now.
and 1 hour.
Okay. Hmm? So basically, this was the daily time frame. I went back to the daily time frame. Okay, because this PD array exists on the daily time frame. Okay, so I could have also taken a look at weekly, but there is no imbalance that exists on the daily time frame, which could be a reason. Sorry, on the weekly. The only thing that exists is this order block. Okay, which the high of this could also be used. This one also could be used, but I prefer to use a daily time frame because we had a daily FPG. Okay, monthly there is nothing. Okay, just a big wick, right? You can't do anything with that. So you keep going from the highest time frame to the okay. Then you say, oh, okay, I have a proper PD array I can use here. Okay, you can look at this, and then there is a volume imbalance also here. Okay, there's an order block. These are all order blocks. Then this is a mitigation block or a breakup block. You can even look at this as a breakup block. Okay, so all of these things are here. So then you know that something here you can use. Depending on what PD array you like, you can use that. Some people use only order blocks for trading. Some people only use gaps for trading. Okay.
PD stands for previous day, right?
No, PD stands for premium discount array.
Premium discount array. Okay.
Okay. So in this case, since the fair value gap was very clear, okay, we can use that fair value gap. Okay. So if you look at it, look at what happened to price. First day it went, it just touched it. Okay, it just touched it. Okay, and then decided to come down. And then said, okay, I'll come down. Today, see what happened. It went to the midpoint of the fair value gap and then came down. Okay, so this is why these PD arrays start becoming very important. You know, it's a higher time frame PD array. You can expect that most of the times there will be a reversal at these PD arrays. Okay, especially because it's almost at the the high, all-time high also. So there will always be some resistance because they want to hold off until the Fed actually cuts the rates. Plus there was some more news and this and that, something everything keeps happening, right? So they want to hold off for a little while until the actual news comes for the rate cuts. Okay. Plus the elections are also coming. So in general, some amount of volatility they need to keep. So they also need to generate enough orders here so that when they take it higher, people will jump in and buy, and then they can sell it and create the sell side of the curve, and they can make money.
Interesting.
Okay.
So the rates are going to go down, but they want enough liquidity with themselves, so that's why they keep selling so far.
Yeah. Okay, because they took profit all the way till here. Now they need to again generate some more liquidity.
This also makes sense when there's earnings coming up, the stock usually goes down, right?
Yeah,
So
exactly.
they keep the liquidity before that.
Nvidia is coming up. Nvidia earnings are coming up. If NVIDIA earnings comes and it goes through the roof, then automatically the index will also go up.
Yeah.
Okay. So it all depends on that. If NVIDIA earnings are not that great, you'll see again either same kind or it'll go down further a little more, and then they'll create some more liquidity and then wait and then again push it back up.
Mm.
Okay. And okay, so what was this? Okay, so it went to this, right? So we'll look at this price action on daily and go to 1 hour. Now, could I have taken a trade of a 1 hour? It was actually a tough one. I could have basically here. I would have had to wait high, low. This was a breakup, but it didn't give me anything. So this is a 1 hour chart. Okay, so I had this fair value gap. I could have taken a trade of this. Okay.
Mm.
So yeah, I could have taken a trade of this 1 hour PA fair value gap. Okay. So the minute it goes in, then I would have had to hold. I would have had to hold at least till midpoint, or actually till the very top here, at least minimum. Okay, to be able to take this trade. My stop loss would have had to be somewhere here. Okay. So the confluence was also this. If I look at it from high, low, all the way till here, there's a mitigation block here, right? Let me use this last one. Basically, what happened was it targeted that. I'll just call it order block for now. Okay, it targeted this mitigation block. Okay, price actually went all the way till this mitigation block, touched it, and then came down. Okay, so that was another way by which I could have framed my trade. I could have actually looked at this side and then say, okay, I have this mitigation block here, so maybe I can take a sell the minute it touches this and then come down. Okay, that is the other way. So now I have these 1 hour PD arrays here. So I know these PD arrays are here. Then I could have said, okay, since I want to trade on the 5 minutes, okay, since I have this 1 hour PD arrays, I know that it's somewhere here it is going to reverse. Okay, so I'll go to my 5 minutes. And then figure out, okay, is there any place here on the 5 minutes chart that I can actually take a trade? It has to be within these boundaries, within this fair value gap and this, right? Worst case. So what do I have here? In this case, what I have is just this order block to which it came to. You see that order block?
Mhm.
This one.
Sorry, what is that time you're showing?
It's the hourly thing, right? In that you're breaking up, right?
Yeah. Where is that? Arrow. This is the order block. So this is a 5 minute chart, right? I have my hourly PD arrays. This is my hourly fair value gap, and I have my hourly what do you call it? Mitigation block or the order block which I'm using. Okay, so I know that somewhere in this area, the price is going to reverse. Okay, so I'm using my 5 minute entry time frame to figure out, okay, on which PD array can I actually take an entry to go short or to go long. In this case, the goal was to go short. Okay, because I used this 1 hour fair value gap to take the trade. Now, the other way I could have also done is I could have said, I'm going into my 1 hour PD array here. I know that, daily PD array, right? This was a daily PD array, daily FPG. And it's quite possible price could also reverse from here, right? So then I could have also said, okay, I could have taken a trade here. Is there any way I could have taken a trade here?
While going down.
Yeah, it was going down. It went down too quickly.
Yeah, right.
Yeah. So it was actually difficult. I couldn't take this trade. There was no.
It created too many long candles, right?
Yeah, it just came down quickly, too quickly. The first fair value gap is this one. So if price had somehow managed to get to this fair value gap, then I could have taken an entry here, and then I could have gone down. So it didn't give me an opportunity. The only opportunity in this leg it gave was when it came to this fair value gap. You see, first opportunity it gave was when it came into this fair value gap.
For short or for long?
For short.
Yeah.
If I wanted to take it further down.
Hmm.
Okay, so in this case, what would have happened is I could have taken an entry here in this fair value gap. When it came here, this candle. Okay. Can you see?
Can you go back to like say around 940?
Today?
Yeah.
940.
And see if we could have taken a short or something there.
No.
No?
So it would have been difficult. Okay. So you could, for example, you could have basically said this is a high, low, high, high again. So this is your breaker block. You treat this as a breaker block. Right? And then when price went back into this, you could have taken that trade. Yes. You could have either on this candle or this candle. But I think the price movement was quite fast in this area, so it was a little difficult to figure out whether you could have taken a trade. Plus, you don't get enough confirmations because what happens is for this to happen, price has to go below. So when this one came below here and crossed this one, right? Then this became a breaker block, and then immediately the next candle went up. And this was probably in the initial when this candle was finishing up and went into this, then you could have taken a trade here.
How about at 130? Sorry. How about at 12:15? Yeah. This we could have taken a bull, right? Long.
This one?
Yeah.
No, because price never came back into this.
No, there was a breaker block there, right? Like this one, like left 4 candles.
12:15. This candle, right?
The one which is 11:50. Yeah.
11:15 or 12:15?
11:50, 50.
11:50.
That one. Yeah. Yeah.
This one.
Yeah. That was an indicator, right? The next one was order block, right? The previous one.
So basically, this was a low, a high, and a low, but it did not go above this. So this is not yet a breaker block.
Okay.
Okay, it's only when it goes above this, then it became a breaker block. So on this leg, when it went up, it became a breaker block. So the only way you could have taken a trade to go to bull was when it came back down and did not cross this, came here and then went up. In this case, it did not allow you to do that. It went up because it was more intent on going down. Okay, it just went down. There's no way you could have taken a bullish entry. Okay. Only other option was to see. Let me go back to 1 hour.
But today was more of a short market, right?
Not so the only other option was to see if there was anything on this side that you could have taken a trade off. For example, there was this fair value gap here. Okay, you would have had to trust that this fair value gap to be able to say, okay, I will take the bullish entry up.
to sustain that,
Okay.
right?
Yeah,
Mm.
because all of these candles actually, respected this. Even though it wicked, it went and closed above that. So you could say this fair value gap seems to be well respected. Okay, and then you can say, okay, fine, let me take a trade and then keep a stop loss below this and hope that it will go up. Which and then you could have taken a trade to the bullish side.
Mhm.
Okay, but this would have been tough for you to take. It would have been because you would have had to trust this and look at all of this and then decide that yes, let me go ahead and do that.
Now,
Yes.
predicting the future, there is a huge fair value gap at the top, right? Around what? Around like 2 o'clock, right?
One on which time frame?
On a hourly time frame. That
12.
one.
No,
The
there
big one,
isn't one.
the big one, the big one, left one.
This one.
Uh, uh.
This got created at 10 o'clock,
Yeah, 10 o'clock.
between 10
Yeah,
and 11, right?
10, 11.
9,
Yeah,
10, 11. Yes.
yeah. So now, so this it has fallen, so huge block is created. So
Hmm.
we can fairly assume that it will dance around before that, before it breaks and goes up.
Yes. Meaning what it's actually doing is just doing some consolidation. So if you
Yeah.
look at it here, right, here also there's a huge mitigation block,
Mm.
right? And this has these huge wicks
Mm.
also. So it might try to, because if it has such huge wicks, that means there's some amount of liquidity that is stuck here in this wick.
Mm.
Okay, so it might try to figure out if there's some liquidity that it wants to take from this wick before it decides to go ahead. So it's quite possible it'll go up, may hit the same fair value gap, and then decide to come down, take some
Come down.
liquidity again, and then go up.
Yeah.
So
Good.
now looking at this, what do we predict for tomorrow?
That's
Tomorrow, yeah, tomorrow is going to be
follow the
tough.
money.
Yeah. Okay. So normally what happens? Okay, fine. We'll get to the next thing that I wanted to talk about. Okay, which is about when does price move? Okay, let me change this. Okay. Okay, this topic now is getting a little more complicated, right? So, but this is how now we're actually getting to the core of what needs to be done and where you need to actually spend your time doing a lot of analysis. Where is that? Hmm. Okay, that's my window. Can you see this?
ICT kill zone and macros.
Yeah.
Mhm.
Okay. So now we ignore the left side for now. Okay, and I'll get to that a little later. Okay. So why and when does price move? Okay. So price moves basically based on news.
Mm.
Okay, that is the bottom line. You need news for things to actually move. Okay.
Vinay,
So,
sorry, give me just 1 minute. Urgent toilet break.
okay, no problem.
Yeah,
Yeah.
me too. I'll also take a break.
Okay, fine. Yeah, no problem.
Okay, I'm back.
Okay. Okay, all right. So why does price move? Okay, so it's very important to actually look at price in terms of news. Okay, so typically there are two websites. I put both in the presentation. Forex Factory is one of the ones which is a very useful one which a lot of people use. It's called forexfactory.com. Okay, and if you go there, then you can actually look at the calendar. This is the calendar of events. Now you can actually do a lot of filtering and things like that here. Okay, where basically you can decide of for which currency you want the news and things like that. Okay, and the kind of impact of what kind of impact news impact you want. If you do everything, then it'll show this. It'll show every small little news that is there also, which sometimes may impact how price moves, sometimes it may not. Normally what this is, you look for red folder events. Okay, but I
My
keep
audio had some issues, Vinay. So this is a different portal. FedEx Factory is another
Forex
portal.
Factory, Forex
Forex.
Factory.
Just one.
Okay, I put the link in the presentation.
Okay,
Okay, you
okay.
can look at it. Okay, so this is one of the websites that we use to find out when we're going to get news.
Uh,
Okay, and if you look at it, I've set this up to be able at New York Eastern Standard Time. Okay, right. So if you look at, for example, next week or this week, sorry, this week. Okay, there's news at different times. Okay, and you're looking for, when you want to see a lot of volatility, you're looking for specifically red folder news. You see this? This is
uh,
a red folder. This is a red folder. This is a red folder. This is a red folder. Okay, so these red folder news is when is what actually moves the market. Okay, which is where if you see most of the times you will find that before as you approach closer to this time, market is not moving. It becomes very sluggish because they're waiting for the news. Okay,
mm,
things are not moving at all, or sometimes it's consolidating the whole night. It is just consolidating simply because it knows that there's this important news that is going to come out at that time. Okay, but the actual news itself is not important. The fact that there is a news at that time is what is important.
Mm-hmm. So it
Okay,
doesn't matter what the news is.
it doesn't matter what the news is. The
okay,
news is used as a camouflage to move the market in the direction that they want it to move.
okay.
Okay, So if they are bullish, for example, right now the leg is bullish, right? So tomorrow and Wednesday we have Nvidia, which is significant mover. Typically FANG, right? Any FANG will move the market usually. Okay, nowadays only Nvidia is moving the market. Apple,
Mm.
all of these guys are not moving the markets that much. Okay, so they wait for that news, and the minute that news comes, you will see market move. And where does it move to? It moves to go. It goes and hits the PD array that they were targeting.
Mm. Mm.
Okay, and then you'll also see that if it's some major significant news, you'll also see it move in the opposite direction first to actually collect all the stop orders of people who entered anticipating a bullish or a bearish move. First, take out all of those guys and then move the market. This is typically
Ah.
what you see that happens.
Even if the news is good, it still goes down,
Uh,
right?
and goes up,
And
and then
goes up.
again sometimes comes back down, sometimes, and then it goes in the direction that I wanted to go.
So
It wants to take out all the liquidity that is there, people who have entered orders, everybody wants to take out as many people as possible so that it can then take those orders and then move in the direction it wants to go to. Sometimes it'll just go in one single direction.
boom. Yeah. Right.
Sometimes it'll go boom. Okay. Most of the time they do a manipulation first and then move and they go in a particular direction.
Yeah, I've seen that. Results are going year on year, everything according to the estimate. Still, it kind of zoom करके नीचे it will go
Yeah,
ಕೆಳಗಡೆ ಹೋಗುತ್ತೆ.
exactly. So they always manipulate the market the minute the news comes. Practically, they don't even have time to read what the news is.
Ah.
Okay. You will see that it will come the minute it is released, it's gone up, down, up, and gone somewhere. Okay. You will not have time to digest the news. Okay. But what you need to remember is, okay, based on the news websites like Forex Factory, you look and see, okay, when is price going to move? Okay, tomorrow at 10 o'clock is a consumer confidence. Okay, so what is going to happen is until then they will keep going up and down, doing something or the other. They will try and figure out and try to manipulate the market up to that point, and then say, "Oh, we're all going up. We're all going up. We're going up." And then at that point, they'll bring the market down. Okay. Or they'll do it the other way around. Or they'll just keep consolidating and then just move the market. Okay. And even among the red folders, there is a hierarchy. Okay. So there are three big news which moves the market a lot. Non-farm payroll, NFP, CPI, and Fed the interest rate decision. Okay, these are three major news which tends to, the minute the news comes, it can go up 300, 400 points, especially on Nasdaq. Okay, these news that you see, red folder news that you see tomorrow, it will move maybe 100 points, maybe 150 points. Okay, but these are tradable news. That's what typically they say. But still, you shouldn't trade these news because of the initial manipulation that happens. Okay, but if if you can anticipate and say, no, I know that it is going to hit this PD array first for the manipulation, and you put a proper limit order there, and then it come take that and then go in the other direction that you want it to go. Okay, but it's typically very difficult to do that. Okay, but if you look at what typically happens, news drivers is essentially the days on which market moves. Okay. So usually that is why Mondays are not good days for trading because most of the time there's no news. Mondays. Okay. So Tuesdays, Wednesdays, Thursdays are when most of the news comes. That is, they say those days are tradable most of the times. Okay. In this case, Wednesday, some guy, FMC guy is speaking. So not a big deal, and that too early in the morning. So that's not going to move. So the move is actually on Tuesday is going to be the major move. Consumer confidence is not a big mover, so they're going to wait for Nvidia earnings. So until Nvidia earnings comes, you will not actually see which direction they want to move the market. Okay. So Thursday unemployment claims, normally that's a good one. Depending on the, they can use that to move the market in a certain direction. Core PC also they move also. But if you look at the major movement was last week. Okay, they had the Jackson Hole symposium. It moved a lot because Fed Chair Powell spoke. That moved.
Hmm.
PMI was okay. So what you can actually do, you can go back, okay, each week and then see, okay, when did market move and how much it moved. CPI, PPI. You'll see that. Okay, August 11th and 17th. On Wednesday, August 14th, market moved like crazy. Okay, this is when the most volatility would have happened. Okay, but these things are good because it tells you the direction that they want to move the market in. This is normally the days where you actually see a lot of this big fair value gaps form.
Hmm.
Okay, and okay, this was okay. And another one is non-farm employment change. This
What
is
is
called NFP. This is the only Friday where movement happens like crazy. When you have an NFP, you have a lot of movement. Other one, of course, is the federal funds rate move. But this one is like it's very difficult to trade because one there'll be one move for the when they announce the rates, and then another move when you're having this press conference, stupid press conference. Because
And
he
and
keeps saying something or other, they will use that opportunity to figure out and take out all the liquidity that is there in the market.
every word, every noun, pronoun, verb is
Yeah, exactly. So everything they will use, and they will just keep moving the market up and down and taking out all the liquidity that is there in the market. They'll just keep things. So it's actually very difficult to trade.
Hmm.
Okay. So there are rules to actually how you can use this information to do your trading. Okay. So, but if you look at it, most of the news basically happens at 8:30. Okay. And so this is where you will actually see a lot of the actual moves happen in the pre-market.
8:30 p.m.
AM,
AM.
yeah, EST, which is
Yes.
5:30 AM our time.
Uh,
Okay. So for when you're doing your intraday trading, so it becomes very important to use the Forex factory to actually figure out for this week, what should I do? Okay.
hmm.
So normally a lot of people, what they actually say is if there's no news, forget it. Don't even trade. It's not worth trading. Okay. It's
Hmm.
only when there is news, you wait for the news and then see, okay, what are they going to do with the news? Because there'll be a big move and then price will come back into some fair value gap. You can take a trade of that fair value gap and then take it in the other direction. Okay. So this is extremely important. So this will tell you the days that you like that the price will actually move, and this is what you need to look out for. So if you are planning to buy something or do something, then look out for these news and then know that on this day it's gonna happen. This is when I need to time and see, okay, maybe I can buy on this day if it goes to this level. Okay. So this is extremely important, this Forex factory. So you will use Forex Factory, okay, or the other calendar that I used. I'll show you the other calendar also. It's also similar. Okay. Go here and
Oh
then
yeah. So 8:30 on 22nd was the news,
hmm,
which was what was that? Unemployment claims,
hmm,
Uh,
and immediately it fell.
hmm, exactly. Okay. So I don't know. This is
what is this one? I don't see this in the link. Where? Trading economics.
no. I put it in the PPT.
PPT. Okay.
You look in the PPT, then you'll see it.
Uh,
Okay. So normally I use these two to actually figure out when price will move. So you can always use this as a basis to figure out, okay, you know what, tomorrow price is going to move and hit this PDRI. So then you can come and figure out how to take a trade on that particular day and then move. So the reason the volume imbalance, you remember the first example that I used, right? That moved on a Tuesday but did not move on a Monday.
Mm.
The Tuesday was a better day for the trade, Monday, they just came, set up the market. They said, okay, fine, let me take care of this daily FEG and I'll set up the market. And then on Tuesday, they took it and went and hit that volume imbalance, which was on the other side.
They took it up, right? Tuesday.
Yeah, they took it up. Yeah, they took it up. So Tuesday was the day when they actually made the move, which told us that, okay, going forward, they're going to take it up. Because they broke everything, took out what was there on the other side, didn't go back to the daily fair value gap. So they left a gap there, meaning in terms of respecting the daily fair value gap. And then they decided, and okay, now we know that we reached the end of this move, is going to go up now. Okay, so this is how you're supposed to analyze the market. Okay, so you to use these, all of the trading calendar and the information that you have right now in terms of the PD arrays, which are the fair value gap, order blocks, mitigation blocks, and breaker blocks, to be able to figure out, okay, when will price move, why will it move, and when you can actually take a trade to be able to move in the direction that you want it to move.
Vinay, which are the news we should concentrate on?
Any red folder news. If you're using Forex Factory, right? So it's basically red folder news.
Okay.
Okay, it's easier that way.
Okay.
Okay, if you're using the other website, there also it's in red.
Okay.
You see, it's red. So normally they think, and you can change it also. If you don't want any other thing, then you can basically just do something like this. The filter out, you can do those filters, and then anything which is red is the important news that you need to look at. So tomorrow there doesn't seem to be any news. So I don't think anything is going to happen tomorrow. So it's just going to keep going up and down, doing something. Okay. So there is yet another topic which will be a follow-up of this. Okay. Which will actually tell you things like when can we expect the high of the week and the low of the week. Based on, it is essentially based on the news calendar. Okay. And once you look at that, then you will start looking at your daily charts, meaning your, for a daily trading charts, right? Which could be anything less than a daily time frame. Okay, then you will start seeing, and it will start making a lot more sense. You can say, maybe, you know what, you look at it, the low happened on that particular day when there was a specific news. Okay, and then you will start making even more sense of the information that you already have. Okay, I think this is enough information for today.
Yeah.
Digest this.
Yes.
Okay, and then we'll see. Then we'll get to the next few topics.
Okay, sir.
But okay, so till now mostly we've just looked at a lot of the language that we have to use. Okay, PD arrays. We're not going to talk much more because all the PD arrays that are important I've explained to you. There are more PD arrays and even more PD arrays. Okay, we will not get to it unless it comes down to a point where you've actually digested all of this. Okay, and you at least are able to analyze the chart and then say, okay, maybe today might be a good day for trading, and then use that as a basis to figure out, okay, I framed a trade out of this and it worked. If you get to that point, then we are good. Thank you.
ನಮ್ಮ ಮಮ್ಮಿ ಹೇಳ್ತಿದ್ರು ಬರ್ತಾ ಇದಾರಂತ, ನಾನು ಇನ್ನು ಕ್ಲಾಸಲ್ಲಿ ಇದ್ದಾನು.
ಈಗ ಬರ್ತೀನಿ ಅಂತ ಹೇಳು. Okay.
Thank you.
So this at least I think this much information is enough. Okay. And then next class, what we will do is we will look a little more closely at I have to decide kill zones, and that's something that you will also keep hearing about, and macros. I will talk a little bit of that, and then apart from that, I'll start. Maybe initially I'll talk a little bit about weekly profiles. Okay, but not too much in detail because it gets very complicated if we start going too much deep. But I just want you to understand that there's something called a weekly profile. Okay, so I'll try and tell you what are the different kind of weekly profiles that are there, and we'll try to map that to the news, and then you will see exactly, okay, on this day is when it hit the low of the week, and this day it went on the high of the week, and those kind of things. Okay, and that'll at least help you start understanding the charts a lot more.
Hmm.
Okay, and then we can get to hopefully we'll get to a point where we can actually analyze these charts before they happen. Okay, when we can say, okay, we can maybe expect a low of the week on or the high of the week on this day.
Hmm.
And if that happens, then we know that we can trade in the opposite direction.
Okay.
Those kind of things. So we'll have to get that, but that will take us time. But at least you'll then at least have the information to be able to figure things out.
Yeah.
And then we'll at least be talking one single language. It will become a lot more easier to look at things and then go back and forth about, okay, look, this is what happened and this is what happened. Okay.
Okay.
All right.
All right. Good.
Thank you.
Thank you.
Okay.
Thank
All
you.
right. Okay. See you soon, Sachin.
Bye.